Sulliden Mining Capital, 16 projects, 5 core projects in one company. Paul, welcome. We want to talk about Sulliden Mining Capital, of course. Well, who are you guys?
Well, Sulliden was formed after the sale of Sulliden Gold in 2014 to Rio Alto. A little bit of cash, just over $20 million, was spun out along with a qualifying asset called East Sullivan in Quebec. It's a gold asset in Quebec. And that formed what is now Sulliden Mining Capital. We are a merchant bank venture capital fund. We take active investments in companies and also in assets, but we are active, not activist.
Great. So that means you take an active role also in the management of the companies you have invested in.
Yes, we do. In fact, in the companies that we've invested in, we either have board seats, management positions, or both.
Great, fantastic. What are the major investments you have done so far? So you have 16 projects altogether, but I think those are the five major projects, right?
The 3 major investments we've made in public companies are Agia, Eurosun, and Bellosun, all of which we have management representation, our technical team in place, and in some cases board seats as well. And then we have our 2 assets. One is the East Sullivan asset, and the other is an option to buy the Troilus asset.
Okay, so let's dive into, before we dive into Aguia, for example, I think it's very important to talk about the valuation of your company, because you hold liquid assets. Those companies are traded, right?
That is correct.
And I think your stock price by now is like 40 cents.
It's about that, 38 or 40 cents right now. Our 3 public investments that we have that are listed on the board there, Agia, Bellosun, and Eurosun, they are liquid public assets with an intrinsic value of just over 70 cents, let's say, per Sulliden share. Some say we're undervalued. We also haven't marketed very much. We wanted to make sure we had our investments and assets in place before we went out to tell our story. But yeah, that value there does not include our 2 assets.
Great. Of course, you have in the past you had very good success. We cannot talk about all your successes, but I think this one is one of the key successes. Can you elaborate?
Sure.
How you did that?
Sure. Our technical team is led by a gentleman named Peter Tagliamonte. Peter was responsible for the Desert Sun mine back in the early 2000s. That was the Jacobina mine. So Desert Sun was a Jacobina mine that was sold to Yamana. Following that, there was another company called Central Sun that was then sold to form what is now B2 Gold. And then Peter went off to do Sulliden Gold along with my partner, Justin Reed. And Sulliden was sold in 2014, Sulliden Gold to Rio Alto. And that's when the spin out of Sulliden Mining Capital occurred. But all 3 were good successes for investors.
And it means for $1 invested, you had a return of $4.23. Is that correct?
Yeah, for Sulliden Gold, if the shareholder held on through Rio and then Tahoe bought Rio, then that would, so that's a nice return for a shareholder.
That's a really nice return. Let's come to Aguia Resources. I think that's the next cash flow scenario, right?
Yeah, Aguia is a very interesting project. We acquired just under 20%. We have about 19.5% of that company. It is a southern Brazil phosphate company, so it's a feedstock producer to the SSP large producers on the coast that then make the fertilizer that will go on the ground in the farmland around it. It is in southern Brazil, which is just farmland. It's soy, it's coffee, it's cattle. It's a very friendly place to do business, and so we're looking forward to this. We just released a PEA in July. From a third-party engineer that came out with a very nice net present value of the project of $400 million and an after-tax IRR of 43% with a 3-year payback. So we're very excited about the economics and the viability of this project. We just raised $8.5 million a few weeks ago in Australia, which we're now using for our bankable feasibility, which is well underway.
How much money do you need to build that? Do they need to build it?
So once we get it to the point of building, it requires about $120 million. It's a fairly small capex in the mining world, but it's a pretty simple project. It's more like a quarry than it is a deep mine. It's going to be an open pit quarry where we scoop up the rock, we crush, we float the phosphate, skim it off, and then sell that to the producers.
And as you are in agricultural country, you have the market in front of your door, right?
Yes, all of our product will be sold locally within a few hundred kilometers of our mine. Currently, all the phosphate in southern Brazil is imported from Africa. So this will just be local production, replacing imported supply of the feedstock phosphate. And we can do so at a cost advantage because our logistics are so much less.
Great. Let's come to another investment, Bellosun. I think that was so far also very successful. Why?
Yeah, well, Bellosun is one of the scenarios which is exactly what Sulliden likes to take hold of. Sulliden, again, with our strong technical engineering team, we look at a project that could be re-engineered, and Bellosun was one of those. Peter Tagliamonte, who works with Sulliden, is now the CEO of Bellosun, and his team went in and re-engineered the capex to be a lower capex with still a very good production. They're going to produce over 200,000 ounces of gold per year. So this is in their final stage of permitting right now for construction license.
That's right. And we have also here some data from the PEA and from the feasibility study, and it's a 17-year mine life. I mean, that's a real big one.
Yeah, and in the first 10 years, they're going to do over 260,000 ounces. It's got a nice low cash cost in around $700 all in, just under 800. It looks to be a very, very viable project.
Fantastic, great. Well, Paul, thank you very much for that. Thanks for the insight into your terrific company. And we want to see at least those two going into production.
Wonderful, thank you very much.
Ladies and gentlemen, this was Paul Pint, the president of Sulliden Mining Capital. And you heard it, two cash flow scenarios in the phosphate and in the gold sector. I think the company is very strong in the market, well cashed up, and the intrinsic value is around 70 cents per share. The stock is now at 40 cents. Very interesting thing. Check it out. Thanks for watching us. I'm your host, Jochen Steiger, in partnership with Dukascopy TV. Bye-bye from Geneva.